I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is February 11, Wednesday, 2026. Hope you had a good day today. So we talked about yesterday at this marker I made here. I talked about getting into this breakout area here. You see that right there? This is the current weak gap in the purple. We busted right through that. I talked about that for the last 2 days of some of these breakout areas and imbalances. So I talked about this area about possibly coming into. And what did we do? We came right to the 930 of yesterday. So algorithm is going to reference these old opening range gaps. Obviously, if the 930 is involved, that level is going to be used based off of buyers and sellers entries and biases and so on, and analysis. So not a coincidence that they come right to that down wick, and we come a hair outside of this daily in the pink, this daily bearish imbalance, and it's a suspension block. But I've already had this on my chart, and I talked about this actually. I also talked about this, I think last Thursday, even coming back into that. Originally when we were down here, and then coming back up in here. So, also, and I also mentioned a speaker. I also talked about a probable speaker situation going on, where we're in a consolidation in the higher time frame range. Very clear. I talked about that yesterday. So again, if I'm making 40-some minute videos, again, I'm sorry for it, but at the same time, I know the real traders or the real people that's trying to learn and they want to be successful, they don't care. Just so you know, I've watched thousands of videos. Thousands. My own even. I make it, then I watch it. Why do I do that? It's muscle memory. It's just sharpening the iron, the knife, the blade, whatever. If you think that you're just going to come in here and take this shit, like for the new people, you're going to go through hell first. I don't care what anybody says. You're going to take years to do it. If you're not going to swallow that pill, you need to just do something else. I'm just letting you know right now, okay? So if I personally have watched thousands of videos from all different walks of theory and all that, and I want to win, right? So if I make a video, then I watch the video, who are you to not watch the video the whole way? Fuck off. If you are that type of person, do not follow me. You're going to fail. I promise you, because it takes hard work to get into this business or any business for that matter. So now that I've said that, I can't remember the minute mark, but I've talked about a speaker here. Why do I say that? Why do I say shit like that? Can't make this up. Look at today. Wow, we shake out. But because I talked about we were by the 50 here, we were of that range, of that control range. We were also in this range, and we're at the 50. Number 3, we also have the news today. So NFP did not go anywhere. And by the way, I know I didn't understand why we had the NFP, but at the same time I just didn't mention it. Whatever their government shut down and wanting to have delayed data and all this shit, who cares? It doesn't matter. But because of that, it is going to skew price action, sentiment and delivery. So saying all that to say this, when you have an FOMC, when you have an NFP and a CPI, you're going to have a lot of hunting of liquidity. You're going to have a lot of back and forth high resistance price action, okay? It's not going to be in a perfect world, we would just like for it to just shoot up or shoot down, right? But I talked about this fucking yesterday. That's why the video is 45 minutes. Is this maybe going to be another 45 minutes? I don't know. But I am officially, I don't care if I make them long or not. I am officially don't care. I'm going to do what I need to do. And if you don't make it through, that's on you, or whatever the case is, right? So anyways, that being said, very clear talked about a possible speaker, right? You can see this. So when do we get these speakers here, right? I'm not going to even try to make this pretty for you. I'm just going to draw. I got my new mouse, by the way, which is fucking awesome. I recommend everybody have this mouse. This mouse is sick. You could do so much shit with it. But my issue with this mouse is that there's a thumb button where your thumb would just rest on it. It's an origami, whatever mouse. And the button is hard to push. So it's brand new, but it's also still harder than the old one. So when I'm like getting messed up here when I'm entering my trays because like, I'm trying to like go back and forth to look at shit sometimes. And then it's like, yo, I just pushed sell here, for example. And then accidentally my thumb does this. And I'm like, and then I do this. I click on this. And now I'm on this screen when I just pushed a fucking entry, right? And then I haven't even put the stop loss yet. And I'm like, oh my God, what the fuck? So I've had some trouble today with this new mouse, but it's still sick. So I just got to get used to it. But anyways, TMI, maybe. You see the high. So it originates here, high, low, another high, another lower low. Almost a higher high, makes a lower low, comes up for a new higher high. So shaking out, right? We had that yesterday. So that was, and that's why I mentioned it in the video yesterday after the price action because of the delivery. And I talked about maybe it's just to retrace more or do they want to come up? But you can see we tagged that breakout level. I'm sorry you can't see it. I can't fucking fit this on the screen. So you can see that breakout level. That's the opening gap of the current week level. We did this in London, pre-New York, right? We tagged it perfectly. What's there? Now I have it quadded. Okay, there's not a lot of shit on this chart. So before I even get into that, these are the levels here. You have the opening range gap. You have the 930 right there. You have the first imbalance from yesterday. I'm going to frame today by discussing what the levels are right now. So you got the 930 opening range, the first imbalance. You have that breakout level. You have that, obviously, the weak gap. But again, back to this speaker, low comes in 50% of the speaker as of that time. All right, so if I, you do this, right? Damn, I hit that button again when I push this button. Why do I do that? And then look where it went. So this is the first imbalance of yesterday. Oh, by the way, I'm sorry. This was from Monday. This is the first imbalance from Monday. This is Tuesday. Today is Wednesday. Sorry. So that's the first imbalance of the AM session of Tuesday dragged out. Look how we came and we tagged it right there in Asia. Oh, okay. You're going to see how I fluctuate, how I move around with this. And then I'm going to leave that one back there. It's not important right now. But now that I said that, we come up and then we make another low. So we made the low here. Then what do? It's mean reverting. It's also coming up above. We already expanded at 8:30 today and took out that high of the previous day's high, by the way. So that's now when you're in this situation, it's either going to keep going or it's going to mean revert. Mean revert means coming right back to the center if you're new of that speaker. Okay. Now when it's here, it's going to do two things. It's either going to stop and bounce and go up, or it's going to stop, or it's going to keep going for the liquidity below and expand that speaker. That's exactly what we're doing here. You can't, for the people who've been following here, already, right? So algorithmically, pay attention. We have okay, I'm going to push this back now that I've talked about that. And that's the 930 level over there. I'm going to talk about what's on the levels here. Very simple. Man, it's hard to push that button, dude. I swear. You have the bearish daily imbalance that I've been talking about. We wanted to use it as support and buy up if it's bullish. It can go outside the lines, and notice how it comes outside the gap for a second and up here. Point is that, what's it called? I have it quadded. Okay, so there's not a lot of shit on my chart, bro. It really isn't. Just real quick. I have the Asia range, standard deviations. I have the opening week gap. I have that first imbalance for Monday. I have it quadded. See the quads here? See this levels here? I'm just quadding the daily imbalance, the bearish imbalance. If you're new, you're like, yeah, do we get it? Hurry up. Now, this is the midnight level. I changed the midnight level to this green blue level. See, it's back there. Wow, we're hugging it now. Oh, not a coincidence. We're hugging it now. Why are we hugging it now? Because we're in a consolidation, and we're also sitting at a mean reversion from those ranges that I talked about. Dude, we're sitting right at the mid. Okay, so I can't make this show. So I've been talking about this for days now, right? So when you get a speaker, you're gonna have a possibility of that. You have also speakers when you're kind of like moving forward, like above price action. Like for example, here, right? Like you see a speaker there because we're pushing up, and before they break out, they want to speaker out and wipe out the liquidity of easy buyers. This is probably what's happening here, most likely. But look where we're look at the price, 306. Look at the price right now, 305. We're on the fucking midnight level. That is today's algorithmic open. Do you think we're hugging on that right now, live? It's on it. Perfect timing, guys. Thank you. But you can't make that up. So I said this yesterday. What did I say in yesterday's video? I said that when it's going to speaker like this, the important levels that it's going to constantly refer to is going to be the 930. In this case, 930 was up here, right? So what's below here? Well, the midnight level, again, I changed it to a green blue. So from now on, you'll see this line. It's a green blue level. It'll be a solid line. It won't be black. And I tried to, this is just what I ended up with right now because I made it also orange with this, and it was like laying on top, and it was kind of confusing. Okay, so what else is on my chart? I'm going to make this long, I can tell, but it's going to be a fire fucking video, buddy. What do I have here? That's the opening, this red here. It's very small, but that's the opening gap at 6 p.m. today. Okay, cool. This level, that's the midnight level. So now I need to make this thicker, I think, because it's like, fuck, man. I don't want you to be overwhelmed. It's just gonna make it look easier. I don't like doing this because it looks sloppy, but it should stand out. And let's take a look. So I have the fucking thing quadded, okay? Daily bearish imbalance, okay? I have that. And then I have the opening range. You can see the 25% there, the 50% there, top 25% there, and obviously the high. Well, that's the 930, which is, ooh, where is it? It's opening right at the top quadrant. Oh, what's also right there? It's an old weak gap. We're not even going to need to talk about that this second, but it's fire. Just fire. Okay, so what else is on my chart? That's it. Oh, and I talked about this. Yeah. So the first amount's from Monday. That's 930's level. Look at 930 and look to the right. Look to the right of on the 1 minute chart, and look, I am hovering over the 930. It is perfect. Do you think buyers and sellers brought it back to Monday's 930? No, dude, come on. Why would they even want to do that? How can they do that? Let's put it that way. How? Tell me how they could do that. Okay, cool. So now we understand each other, right? That's a wick right there. So they're mitigating that wick. Because guess what happened when oh, there we go again. See the wick? When it rated and then it crossed over. This is the 15-minute though. I tried to tell you the 15-minute is something that they look at, they reference, they're using. It's just, I mean, could another time frame show that wick? I don't even think it's on the 5-minute. It's not, is it? No, it's not. So but not a coincidence that it happens to be on the 15. But that wick, as soon as it crossed over, it's a bullish candle. So they're coming to make sure that they tagged it, because anybody who pushed buy after it crossed over the 15-minute, that's what they're doing. That's a little extra. The point is it hit the 930. Why? Because they know motherfuckers bought. So back to this fire. Dude, I hit it again. I hit the thumb again. Dude, I don't know why I keep doing that. Anyways, so let's get into the video, because now I just have to do all that just to frame it. I need 14 minutes just to frame it. So, it is what it is. What's it called? So being at the ranges that we are, being at the type of week that we are, FOMC, NFP, CPI, we have both of those in this week, and talking about rate changes or not and all this bullshit. Well, so it's a holding pattern, time distortion, keeping the price in the range. And that's how you can maneuver in something like this, is using that speaker understanding, using the mean reversion. This is a mean reversion play, right? So back to the gist here. We already see, look at the level, midnight open. That's the high. Yeah, that's the gap, but that's the open. So that level is also very key. It's sitting nested with the 25% bottom of the bearish gap. So we hit that. I'm going to give you a fucking play-by-play. Watch this. We come in. All right, we're playing around it. We come above it. We're using that daily open today. We come below. We're getting higher lows here. They're inducing liquidity. They are making a sell model. This is a sell model to in the future, meaning they, they're incorporating an original low or consolidation, and then they push up here. We're getting fucking accumulation 1, 2, or 3, and then it raids that liquidity. So in a sense, that was a buy model initially, raided that, and then when we're here, okay, does 930 is up here. I said this in yesterday's video. Do you want to buy up here? Let's just be, real here. Would you even buy up here? No, dude, no one's fucking buying here. Now you're going to say, oh, at 8:30, and by the way, look where 8:30 opens at the news for NFP today. It literally smacks down. There is an imbalance right there, whatever. It smacks on the 50. This is of the gap, of the bearish pink gap. And then 9:30 opens and it tags it. You fucking think buyers and sellers did that? Come on, bro. I would never trade this. Anyway, I always wait till for 9:30. Fuck that. On Thursdays and Fridays, sometimes I'll trade at 8:30, but I have completely slowed that down to a halt, damn near. So I'm not interested. I'll just wait for the 9:30. There's no sense to be off size. There's no sense to be married to something, and it's just there's whatever. Depending on the context of, man, I hit the thumb again. All right, so boom, tags it. Okay, pushes up here, gets to the first imbalance of, we're not looking at this anymore. Okay, right now. Just yesterday's, Tuesdays. We come right and we tag it. Ooh, what's this? That's the 25% of the gap. Okay, so we play it, we come above it, we play it. We're sitting right there. Look where that imbalance is. That imbalance is sitting on a quad. It buys from it. This imbalance, well, more likely this imbalance. So this technically is being still reclaimed here. I'm gonna just move this here. So, you see, that imbalance is sitting at a quad. So it's still using it, right? And then that's maybe refined, but then you can turn around and say a down candle. But I need to move forward. So, high probability. This down candle bounces on top. We're in that previous first imbalance. We're digging it. We digged it. We pushed up. We pushed up to that gap. We sweep outside. We take out the previous day's high. They already took out the previous day's high. Now, again, you're not going to want to buy here at 9:30. We know that if the price is here at 9:30, the opening range gap settlement is here. That means I know that 50% is here. And I haven't been marking my circles. I need to do that. I don't need to, but it's nice for you to understand. I do it for you guys. I don't need to do it. So I don't, it's been nice trading in peace, not having to fucking show trades every day. Anyways, you can see that 9:30 is up here. And if it was going to buy, it would have just pushed up, right? And it would have been really strong. We didn't get that, right? So I'm not saying that it couldn't come back and buy again. But let me get into that conversation. But the point is, I'm not buying up here. Okay, cool. But this is a pump and dump. This is what this is. So it raids this liquidity here. And then one candle only. Notice. And then we start to get the bearish candle. I'm pushing it. Immediately sell once we're passing this level. I was bearish the whole time at 9:30 up here because of the fact, and I don't have to have a bias here. I just understand that the opening range gap 50 is very likely because of the fact that this 8:30 shit was in. It's unfair, bro. It's super unfair. Nobody can participate. Only gamblers are participating, and if they do, it's just like, bro. There are people who do gamble and they made this nice. They want to get ahead of the push up, right? and it's a data low, and I expect to, and I'm circling this. Why? Because, and this is how I make videos long. This is why I stopped doing the circles, but I'm bringing it back here. Okay, so here is because the 50% is sitting right there that I'm highlighting, and then the 25% is right there, and to the left is liquidity. Remember, this was easy buy, right? This on a 15-second, you'll see this retrace, this push up, retrace into an imbalance, and it come to like a 50% range from the low to the high, induce people to buy there. Very nice buy and easy. I said I'm not fucking with it. I actually have to go, there it goes again, dude. Why? Why do I keep pushing this button, man? I can't have this, dude, because when I'm trading, I'm literally pushing buy or sell, and then I end up fucking doing this, and it's like, bro, I haven't even put the stop loss yet, and it's moving, man. God damn. I gotta figure that out. I don't know what's going on. Anyways, 15-second, you'll see it. So, fuck me, bro. Okay. So I understand that this first circle is nested. You have a lot of confluence here. Plus, I have that imbalance of yesterday, first imbalance in the green, right? And then I have this next circle. This next circle is what? The 50% again. I have the daily gap here. I have the settlement here. So you see me, I'm circling all this. Oh, why am I circling below it? Because of the liquidity right there. Sell model. So yes, this could be the final sell model. That's fine. But this to me is also a minimum because of the data low and because of, just everything I just discussed here. So do I have to hold it to this? No. Can I take another trade to get into here? Yes. Do you have to participate? No. Point is I'm just giving you the references here. And then I've already explained what these levels are down here, right? Okay, cool. Now that we've said all that, we bust that, we break that low it makes, right? And the high breaks, comes up for a lower high. I'm in the sell here, right? So we have a first imbalance here. Okay. Now it's debatable if it's this one or this one. I like this one because it's a more of a displacement in the candle and it's more points size. This one does break the 931 candle low. The 932 does break through, but it's inside this candle. And yes, that is the first imbalance. And we don't count the 930, but yes, that is the first imbalance. So either one to me would work in this conversation. Okay, so let me just move forward. So I don't know which one I'm going to stick with. Maybe I'll stick with this, but whatever. Point is, we come in and we're making lower lows. We get into to that first imbalance. Look how we're tagging the 50% of it. This is from yesterday. Oh, what's right there? Remember, we made the fucking high right here in Asia, right at it. So they're mitigating the breakout area. This is a breakout area. So you have a high confluence of it coming into here. Now the 50 is here. Look what it did. They fucking got here. They mitigated that area, acted like it was going to buy, and it could have. Yeah, it could have. Okay, it could have. But we're most likely coming lower for this understanding that I already explained. But okay, fine. Notice how it doesn't tag this confluence level. Oh my God, I did it again. Why? Why did I do that? What is it? Is it this? I got to figure it out. Anyways, the liquidity here. But we get in the circle. Notice how we tag it right there, right? I squeeze out right here. Then I'm looking for a re-entry. So now I have this imbalance, right? So we come above. We come above it, okay? And we swipe outside of the gap. Not only the old week gap, but the bearish pink gap plus the 930. Plus we tag inside that imbalance right there of the 932. Okay. Now, at this moment, if it was bullish, it would have made a new high. Number one. Number two, if it was bullish, This next candle, this 946, this shouldn't have came down like that. This should have just wicked a little bit maybe, and actually you would want to see it. You would want to see a create an imbalance because that'll show strength. Didn't do that either. Didn't wick and then go up. Didn't do that either. What did it do? What did it actually do? It broke all the way down here to the 25%. Now, that's a big sign that you're bearish, but you're not really out the woods yet because that could have been a higher low. We could have shift structure here and pushed up, retraced, and then now felt, listen carefully. These next candles, they need to push all the way through. None of this playing around and then coming lower. You ain't supposed to see that, right? So now you have what? Now you're starting to have no bodies here. Look where that imbalance is. Notice that. This is the last up candle. We're digging into it. Lower highs. The signs are there. You're not getting the push up. And to be honest with you, you're still in a premium. So I wouldn't want to buy it anyway. How am I able to tell you what I'm telling you? I've been watching this price for many years, but I've been watching it. Meaning I really understand each candle. Each candle is telling the story for the next candle. As cliche as that might sound. But anyways, so here's another sell opportunity. We pop right into it. This candle here, this 955. Now you got the macro kicking in. The time's involved. It's going to start hunting and printing, and consecutive candles come down to sweep that low. The price is already down here. I talked about this yesterday as easy price action sells when you're going to be approaching lows or highs. You'll see plenty of that. Anyways, this is that example here. We get to that first imbalance and boom, we come underneath. We're at the midnight level. We've swept these guys here. And then guess what? Well, now you've got your order flow. Again, now that you're at the mean reversion, at the 50% of this current speaker, this is before we came all the way down here. Okay, so the price action's like that, right? And you're looking at this. That's a mean reversion. Sorry, this is a mean reversion. You're sitting at 50% sort of speak. At this moment, it needs to fucking be strong. Consecutive candles, higher highs, higher lows. You are not getting that. You're not getting this. Okay? What are you getting? You're getting the opposite, right? Okay, so now I can continue the conversation. So what do? We pop right into that fucking breakout level and that imbalance from yesterday. Wow, we're still using it. Yeah, that's a bearish imbalance here. I did not mark it, and I should because it's sitting on. I just didn't have time to put the fucking thing there. Let me just do it this way. I did. Let me just do this. Sitting right on that quadrant, isn't it? See it? You see this? It's right there. See it? So that imbalance is on that 25% quad. Just like that bullish imbalance was sitting on that quad. High probability. Wicked right in. Not even above 50% of that first imbalance of yesterday. Wicks in, no bodies in. It's immediately rolling over. This becomes a control of price. We're digging right back into it once we make a lower low and we come underneath it. There's another bearish imbalance. It's right there. All right, and then you have an up candle. Beautiful, perfect delivery. Now you're underneath the midnight level. That's, by the way, it's going to be this green blue looking level line now on my chart. Okay, it's my first time I've made it this color in 4 years or ever, really. Anyways, and yeah, so you're getting your structure here. The order flow, we're now from the 50% we sealed. Now we're of the opening range gap. Now we have the 25%. That's right there. We come and we snap right to it. Okay, getting in here. This becomes an inversion. I can't even keep talking about it. So once you get to this level, is there a willingness for it to fly up from here? It's not likely. Why? Yeah, I don't care you're in that imbalance. Yeah, there's a breakout level here. But the thing is that this sell model, this liquidity, and the range conversation and manipulation that we discussed, we're way past now 50%. It's most likely going to now continue the speaker on the downside. This is not phase of price. This is not structure. This is none of that. This is manipulation. So we're discussing manipulation. How did I learn this that well? From fucking Dow. Old days Dow. Anyways, and forex when I initially trade euro. Anyways, what do you call it? So, boom, getting to the midnight. So now we're going algorithmically through these levels. All right. If I didn't have anything on this chart, you could see the order flow, but you wouldn't know that there's levels in the background. This is a grid, people. It's a grid. It's a grid. And we're referencing this grid with algorithmic levels in the background. We snap to the daily open right there, and we're hunting. Now they're trying to rush to get these guys. Why? Well, and all these guys. Why? Because these guys think they're in the good. Now they're hunting it. That's why it's that fast. This is good to see. We want to see this type of price action anyway. Just beautiful though. And then low resistance runs, and then it started funky though, right? And then this, would make me not want to trade at all. But do we end up going higher or do we end up going lower? We break through it, and you can see them leaking, and then now the price is starting to run well. So patience is what's going to pay for you. All right, daily gap. Then we get to the 50. We play around. We seal the settlement. We just wiped out these guys here. And then we pause. 10-10. We pause. Okay, right at that level. And then it immediately instructs to send it lower, to continue these guys here, to get to the first fucking, not the first, to the open of the opening week gap, current one, and that low. Remember that low? That's the real structured low. We tag it. We get into this bearish imbalance. We keep sinking, drives now, and we're coming outside of the current week gap. Why? Because I told you guys, or you should know that when it's above or below or above below, they're making decisions based off of, based off of the levels. So once it leaves it, that means it's a bullish week. Okay, right? Okay. So the guy here, even if he bought, he's putting his stop, he's even jamming his stop loss here now. Point is, they know that people bought below these levels. So anyways, it's referencing it. It's just doing in-house cleaning, okay? So we get the drives. Now, the first imbalance from Monday. I told you Mondays and Wednesdays were important. We're running right to it. We come to it. Another bearish imbalance. We sell off again. We get these lows, and then we break above. Is this a structure shift? It is a minor structure shift. A micro structure shift even. Then it retraces all the way back. Gets into this last body candle. Notice it doesn't take out that low. And notice this low, I told you, is the Monday's 930 level. Also, look how it swept outside. Just like I told you here. And here. And I say this all the time. Just like how I say this all the time. That just comes outside the gap. Oh, just fucking random, right? Totally, completely random. How? Oversold and beautiful. Now we're early in the day, approaching the 10:30, and because it already stretched so far and it's only 10:30, you're gonna probably expect a retrace. London close, come in, and then it's gonna retrace back. What for the breakout, for the mean reversion? Remember, this it's the speaker. Mean reversion is up here. Breakout level candles here, and so on. Even if you look at just at this simple 15-minute low, at the algorithmic level, which is coupled with the bottom 25% on the gap. Look at the bodies, dude. You're not making this up. So when the price is here for a buy, this is a great buy because it's a minimum going to come to this breakout level, which is that low, which is this level here, which you see it comes up and sweeps. All right. And then this comes back in. We're sitting at it. But if it was going to roll over down, okay, fine. But we know that from here, it's most likely going to come up here. And if it keeps going, where's it going to go? It's going to go back to these breakout levels. Look on the 15-minute. Those breakout levels come right back to the 50. Oh, notice how the two circles that I have are not by random. This is a fulcrum point as well. So is this. So this was support, break, resistance, so-called entry method for selling. Did we fucking go up there? Yeah. You see? See how we came up to it? Do you think that's a coincidence? It's not. Buyers and sellers didn't do that. This is a break. That's why I'm talking about this sell at the 50 and the top quad and that first imbalance. Look at that. Look, I'm highlighting those three already before the day starts. Now this one, when we broke, notice how we came back to it. Why? Because that's the 930. I'm sorry, not 930. The opening day gap, the 50% of that day, the day gap, the data low, 830 level, right? And the sealment, and that's decisions making. We blew through it. Look how when we bought, we came right to it. Yo, you can't make this up. Now this is fire. This, you get a minor shift of structure. This is going to be seen on a 15-second better. I'm trying to tell you, if you don't have seconds, man, I don't know. You're not going to get the clarity like this. Must you have it? If you want to trade algorithmic theory, I think you should have it 100%. Can you just trade, by, buying a 15-minute candle, the next 15-minute candle, which is this 10:15? 10:30. Yeah, you can do that too. But look at the 15-second. Look how we come in. We come underneath the daily gap. Not daily gap. The Monday's first imbalance. We come up, we come down. You don't know what's happening yet. Oh, then you get these two breakaway candles. 3 even. Well, there's one there. 2, 3, 4. These 4 candles that push up. It's a minor shift above this high right here. Well, yeah, pretty much above this high right here. But really, this is the swing that you need to trade above on the 1 minute. But for now, on this 15-second, you get a shift above here. It's a clean break. All right, you don't really get that anywhere else here like this. And balance. Okay, we come underneath, we come deep. All right, and we're inside this wick right here. Microstructure, this last down candle. Anyways, it doesn't break that low of that imbalance. So this is the lowest imbalance, is the most discount. If it's going to buy, it's going to have to buy from here. And sure enough, it did. Can't make this up. Comes above, comes back into that first imbalance of Monday. Today's Wednesday, guys. Okay, look at it. Look at it, right? See that? And then, oh shit, you don't fucking say. We pop up again, and we retrace back. Look at the body sitting on top of it. It can't be random, people. It can't. Excuse me. I'm going to go back to the 1 minute, but I wanted you to see this. And you get your higher highs and higher lows. Where? All the way back up to this beautiful spot. Right, and then we get ranges, we sweep here, little consolidation, we push back up. They're inching their way back up. So at this point, we don't know what the bias is, but if we didn't have a bias, we knew that we came down to wipe out liquidity to the left. Once we did that, we have to go back up to wipe out the easy sellers. That's it. There is no fucking rocket science to this or that. If I had nothing on the chart, that's how I would approach it. Okay, let me go back to the 1 minute. Yo. Fuck. Anyway, well, I'm giving you literally the whole day play. I can't go anymore. We'll be here longer, but so when you see this shift, again, it looks like a shift. It's a strong candle, but you really don't know yet. But you've been falling for so long. A, B, you've hit these levels that we discussed to the left of the chart. C, time and ready to get some of these easy sellers here, right? But shift. Not a shift yet. You need to shift above this swing guy right here. See this 1220, 1022. So right here, we don't do it. We come back in. But this is in the background. Then guess what? You don't have no bearish inversion here, but you have this one. And you want to use that if you want to trade it. Notice how we tap it. We tap it here, and then we go above it, and then the 1038 ticks it. And then it's gone from there, right? But that's the real shift of structure, right? So you see that here by pushing up. Look at the body sitting there, coming right back in. Tick to the first imbalance of Monday, stretches up, no bodies anymore, and ticks there, and then it's higher, high, higher, low situation, dancing around the opening day gap up 6 p.m. and then the 50%. We're just playing around there, coming back to the 25% and the open week gap. See, this is a magnet. It's a black hole. You have a quad level with the opening week gap. It's a very high confluence. All these opening range gaps, there are gaps. But when you have them inside, when you have a new day opening gap, for example, also inside a new week opening gap, then it's high probability to reach that level. So notice what we're doing here. We are, there's an imbalance right there in this little one, this 1038, very minute, but it's on the quad. Look at these two down candles, this 1036 and 1037. It's on, look at the open of that level. It's on the quad. Notice how we bought from it and bought from it. We never went below these candles here. So, fire. This is algorithmic precision here. All right, dancing around, comes to the 25%. Watch this. We shoot up. We get to the 50, opening day gap, shoots, comes to the top 25, bottom 25%, plays around, boom, hits to the midnight level, stretches to the 50 of the opening range gap, falls short of the rest, and retraces back. Boom, plays around there, comes outside. And in this situation, where's that previous day? Previous day low. Look where I did it again. Look where the previous day low is. Look to the right. This guy right here. It's pretty much making sure that when they bought back up below this level and it went above the previous day low, look to the right. We're coming in to kind of squeeze some of that. That's my explanation for it. And also there, you see this inversion here. You see prices also holding it there. I'm not going to, get into too much detail with that. And there was something else I was about to say before I forget it. If I have this bearish daily imbalance in pink quadded. If you add another layer of quads, which is an eighth here, eighth here, eighth here, eighth here, you'll notice that this low of yesterday is in the middle of this quad of here, 50% to the 25%. This would be the eighth in the middle. Notice the low of the day is literally that level. Go do the research, right? Oh, and remember yesterday, if you're following the videos, remember I said yesterday that that in between this quad and this 50 would be an eighth as well. Oh my God, I did it. Why do I keep doing that? I have to stop doing that, man. While I'm trading live, it's going to be nuts. Notice how interesting how the month of January's low is literally, they already had this level, and the range, the eighth level was going to be already predetermined to be around that 50%. I know that sounds crazy, but anyways, this is the 50%. This is the eighth level in here, and look to the right. We're kind of coming back into that. Maybe this is TMI. It's fine. And then I got to figure out that button. All right, we come in and we're playing around all these levels: midnight, opening day, bottom 25, reaching above the quads, slamming back down to the bottom 25 of opening range, coming back to the 50. Remember, back to the 50 in the quad, playing around the midnight level, coming to the 25, and fucking the midnight, playing around, hitting the midnight, and we're just here. I have to move forward. I cannot believe that I don't know how to make short videos anymore. It's 44 minutes. This obviously, VIX is pushing up here while we're coming down. Very easy for that. And once we made an overbought here, very beautiful. It delayed with some drives, and then once it kept going, and then you were all the way up here, you understand that it's probably going to turn around to get to an oversold on the VIX while we have been now pushing up. Very logical, very simple. Here is a shakeout speaker as well. And then we had a higher low with Dow, and we had lower lows with S&P and Nas that pushed us up. Once we pushed up, this was a lower high with Dow. We had higher highs with S&P and Nas, and that pushed us down. Once we pushed down, you had lower lows here with Dow, higher lows S&P and Nas. You had I talked about this being a suspect push up. I said I don't see it how I could just keep buying up from here. It ended up buying up from here, but it fell short and we sank, right? So this kind of like a little hard to believe. We're dancing in the opening gap. Why would buyers and sellers bring it around the fucking opening gap? I'm sorry. Who wants to sell anyway? Think about that. That's how you know it's a scam. Who wants to fucking sell? Nobody wants to sell, bro. Nobody wants to sell. So, drives up, right? Failed. Maybe, is this going to be a turn? We'll see tomorrow, but we're still bullish. And we're just going to keep it simple. And then I've been talking about these assets of why Nas is so low. Obviously, you can see that we're bullish. All highs with Dow. It's because they have obviously only 30 companies, and with 30 companies, it's easy for one company to have a great earnings or quarter or strength, and it will push up the whole damn asset. And with 500 companies, as far as like S&P, it's harder to do that. And then with Nas, it's 100. So that'll explain the logic of why we're still kind of low, but I think they're just holding it. And we're still here. And this is a shakeout for them as well, right? So mean reversion play here, very simple. I know I'm beating a dead horse, but I know there's a lot of new people here. So you see this here, just coming right back to a mean 50% from the high to low. And we're just consolidating. Go do the back testing on mean reversions. And then we have Nvidia. It was not really going anywhere, but it was also pushing up and coming back. So it's just wasn't really that helpful. But that's kind of what we are. And moving forward, as far as what are we doing here? The thing is this: the seasonal data when it comes to hold on one second. When it comes to the 11th, so we're supposed to buy from the 10th to 11th now. They all agree that we're supposed to start flying up. So I'm just going to sit here and say that we're still bullish. Notice also on the daily candle that when we made this high on Friday, Monday opened up and we shot up. Tuesday came back and it bounced on top of Friday's high. Why? Because that was a breakout area. Okay, so that's why Tuesday here, this low yesterday, came to this area initially because it was a breakout level from Friday. That's a daily breakout. Then guess what? When it came down for extra measure here, it came into also the close of Friday. So the close of Friday, why they sweep it is because they want to make sure that someone is, they want to sweep that, they want to reference that level of of the fucking close on Friday because people made a decision of buying when it went above that open level. Not notice why we swept outside of it. But what did they really use in the magnifying glass here is the fucking perfect level of outside of that daily bearish gap balance. So again, dead neutral. I mean, they're even printing it to show you as dead neutral, right? I still think we're bullish here for some reason. If we don't, CPI is going to be on Friday, but with the seasonal data, okay, and there's a lot of people trying to sell this probably. I wouldn't be surprised if they come up first before they end up coming down again. But I'm going to tell you right now, if you've been seeing the projections that I've been drawing from the last days, pushing down here and then pushing back all the way up. Well, here we had a speaker, which is we'll call it a consolidation. They rated it again, and then we expect it to go up. So at this point, I'm expecting it to just fucking go straight to hell up. I don't have anything else for you. The 5, 15, and 30-year all show. Matter of fact, you could wait all year just for February fucking 10th, and you're going to see one of the strongest seasonalities of it all agreeing and pushing up here. And this is what it's supposed to do, okay? If you do not get this, people, if you do not get this, and it doesn't buy from lower here. Let's just say I wanted to come and tag this before it went back up. So it dropped and then it went back up. So if you don't see any one of those two things here, then we're fucking bearish. Period. Okay? Come on. Take care. God bless.